My name is Mio Ahmad Mabesa. Now I want to talk about definition of taxation. Contribution levied on personal property or business for the support government. In IRB, tax guide is an amount of money which taken from your earning to help towards some of cost of service in this country. The connection of a share of individual and organisation income by a government under the authority of the law. A burden of charge imposed by legislative power upon person or property to raise money for public purpose.
Now, I would like to talk about objective of taxation. There are 4 objectives of taxation, which are taxes are used to fund government development and social expenditure. Number 2 is taxes are to be collected efficiently and at minimum cost to government and to the taxpayer. Third, taxes can be used as a fiscal tool to maintain the desired level of employment and increase economic development and growth. And lastly, taxes are used as policy measures to encourage activities beneficial to the country and to discourage those which are not.
My name is Nur Naimah binti Halim, and today I would like to talk about scope of charges and type of tax. According to Section 3 of the Income Tax 1967, a tax should be known as income tax shall be charged for each year of assessment upon the income of any person accruing in or derived from Malaysia or received in Malaysia from outside. There are 2 types of scope of charges. First is the transaction must be income in nature and accrued in or derived from Malaysia. For example, Pak Abu is working in Malaysia. He earned income from Malaysia, so he is liable to pay the income tax because the transaction must be income in nature and it comes from the Malaysia. For the second one, the transaction must be income in nature and is received in Malaysia from outside Malaysia. It means it is a foreign income source, such as business in banking, insurance, and air or sea transportation. So, the income from the foreign source will be taxable in Malaysia. There are 2 types of taxes. First is direct tax. What is direct tax? Direct tax is borne entirely by the entity that pays it and cannot be passed on to another entity. It means that it must be paid by the person or the organization on which has been levied. For example, income tax. Pak Abu has received the income. So, Pak Abu need to pay the income tax. Pak Abu cannot pass it to anyone, but he needs to pay it by himself. The second one is indirect tax. What is indirect tax? Indirect tax is levied on goods or services rather than individuals and is ultimately. Indirect tax can be paid by consumer in the form of hire purchase. For example, sales tax and custom duty. What is the biggest difference between direct tax and indirect tax? We need to pay the direct tax to the IRB, which is Inland Revenue Board, or in Malay we call it SLHDN, while for the indirect tax we need to pay it to the custom.
Classes of income. Income that is chargeable for tax under Section 4A. First, A. Gain or profits from a business. B. Gain or profits from an employment. C. Dividends, interest or discount. D. Rents, royalties or premiums. E. Pensions, annuities or other payments not falling under any of foregoing paragraph. And F. Gains or profits not falling under any of foregoing paragraph.
Basis period, basis year, and year of assessment. First of all, there is the year of assessment, which is the year coinciding with the calendar year. Like for an example, YA 2019 is the year ending 31st December 2019. So this shows that YA 2019 represents the whole year in 2019. Next is basis period. This is normally the financial year ending in the particular YA. For an example, company closes its account at 31st March 2019 is the year financial year ending 31st March 2019. My next point is chargeable person. The trustees make up the trust body, and the trust body is a chargeable person for income tax purposes. All the trustees of a trust are jointly and severally responsible for doing all acts and things as are required by the Income Tax Act. For tax purposes, in the relationship between the trust and the trustees is that of principal and representative. An example, keeping records, submission of tax returns, and payment of tax or debt due to the government. It should, however, be noted that the trustees of a trust are responsible for payment of tax, debt, or penalty only up to the accessible monies from the trust. This significantly means that the trustees cannot be compelled to pay out of their own pocket to settle the tax debts of the trust.